If we get that hockey stick up, 40 is easy. 50 is actually not that big an ask at all. If the market goes into correction for a while, then yeah, it's going to be later. But for what it's worth, I don't do crystal ball predictions, but for what it's worth, it feels very strong to me. My old wolf whiskers are twitching here. I don't see the near-term bear case other than the technicals. And, the central bank buying is not going away. And okay, they're not buying silver, they're buying gold. But silver is tracking gold this year.
The Federal Reserve is widely expected to keep interest rates steady at 4.25% to 4.50%. Still, any unexpected hawkish signals could trigger selling pressure, while a more dovish stance may fuel another leg higher. Silver is trading above $34, slightly lower after hitting an intraday low of $33. The metal remains in a consolidation phase, caught between the strength of the US dollar and growing speculation that the Fed may shift toward rate cuts. A dovish tone from Fed Chair Jerome Powell could attract renewed buying interest in silver, reinforcing its appeal as both a safe haven and industrial asset. Lobo Tiggre, CEO of IndependentSpeculator.com, remains bullish on gold and silver. He believes $40 silver is easily achievable within 3 to 4 months. While acknowledging that $50 is a key psychological and nominal all-time high, Tiggre notes that reaching this level would require a significant move from current prices. Gold has recently crossed the critical $3,000 threshold, which could either spark a wave of investor enthusiasm, pushing prices higher, or prompt profit-taking, leading to a temporary pullback. In either scenario, silver is likely to follow gold's lead. Tiggre suggests that silver will not be left behind if gold continues its rally toward $3,500. Even if the gold-to-silver ratio widens temporarily, he expects silver to rise alongside gold. Until mid-December 2024, silver was on track to outperform gold. However, a sharp pullback in the final 2 weeks of the year allowed gold to overtake silver, closing the year with a 27% gain, while silver ended with a 21% increase. Silver has remained undervalued relative to gold, with the gold-to-silver ratio surpassing 90 in January 2025, before starting to decline. While a new inflation-adjusted all-time high in silver would represent a massive move, potentially into triple digits, Tiggre acknowledges that silver's underperformance in 2020 compared to gold remains a factor to consider. However, he points out that at $50 in silver, many mining companies would generate significant profits as their operations were initially designed for much lower price levels. Whether or not silver reaches its previous highs, a substantial price increase would be highly favorable for silver miners and their investors. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
Well, as you're asking, we are within kissing distance of 35, which is a significant number. That's I'm not a TA, but my friends who are TAs say that, 35 was the ceiling that it bumped off of before. So piercing that would be significant. It's interesting that we're there. The answer to the question, if we step back a little bit, is actually, I'm very bullish on gold this year. I'm very bullish on copper this year. I don't know if we've spoken about that or not, but I'm extremely bullish on copper. And with silver frequently acting like an alloy of the two, at least, on the markets, how can you not be bullish on silver in that environment? If I was bearish on copper, like worried about the industrial metal side of silver, then I'd be in a different place. Mm-hmm. But, so $40 is easy to see. We're at, as you and I speak, we're at a critical moment, a critical level with gold over 3,000. And either, in my mind, that triggers, all the headlines, all the excitement, the awareness that the miners are just printing money at these levels, right? Even the crappy ones are seeing margin expansion. And that's a technical description of miners.
Of course.
So in that environment, it's possible to see that just that round number causes the next leg up. It just causes the media attention and the generalist investors to say, oh, we're missing something over here, and to pile in. If we get that hockey stick up, 40 is easy. 50 is actually not that big an ask at all. My primary answer right now is gold. If gold remains on a tear, I don't see silver getting left behind. The silver gold ratio might actually widen. I could see gold going, ripping up to 3,500 and silver still just kind of tagging along underneath, but it'll go up. Even if it doesn't hit nominal all-time highs, it'll go up. And by the way, a nominal all-time high for silver is a big move. It's triple digits. I haven't looked recently, but it was well over $100 last time I looked. It might be over 200 that you mentioned now. That might be where that number comes from. I don't know, but it is a big move. And I'm not saying that can't happen, but I don't think that never mind my wolf whiskers, but the silver's failure in 2020, right? It was the I've fallen and can't get up medal in 2020, whereas gold came screaming back, right? I think that's data worth remembering, and the industrial side is worth remembering. So, it doesn't have to do what it did before. But you know what? If it goes to 50, the silver miners who are, their mines were built with much lower prices in mind. That's a fantastic price for the business. And so I really don't care whether we get a new real all-time high or not. If it goes up, the silver miners that have projects of real merit or mines that are actually making money, so much for the better for them and for my share prices.
Investors are increasingly concerned about an economic slowdown and heightened recession risks, driven by U.S. President Donald Trump's tariffs, which many believe could fuel inflation. Gold surged to a record high on Wednesday, as rising Middle East tensions and ongoing trade uncertainties bolstered its appeal as a safe haven asset. Meanwhile, traders are closely watching the Federal Reserve's decision later today. Currently, gold is approaching the $3,050 level, and if it manages to sustain gains above this mark, it could make a run toward $3,100. Lobo Tiggre acknowledged that gold's continued strength has taken him by surprise. He had anticipated a correction or a temporary pause in late December, which he still views as a natural and healthy development. However, the metal has defied expectations, climbing higher amid persistent global uncertainty and geopolitical turmoil. Now let's redirect our attention to a video.
And people say, oh, you turned bearish on gold this year, Lobo, because you like copper better. And that's not true. I've never articulated a bear case for gold. I just said that last year we had this hockey stick, and yay, I nailed that. And by the way, in 23, it wasn't gold. I'm not a perma gold bug, right? In 23, it was uranium. And that worked out really well. So this year, it's neither. This year, it's copper. We'll see if I'm right. And that's a by the end of the year projection or guess, by the way. Copper has moved already this year, but not for the reasons that I expected it. So I'm not trying to claim credit for copper yet. We'll see what happens. But so the answer to your question is, we had this great hockey stick move. It did wonders for my portfolio and for my clients. Yay. But to ask the market to deliver 2 hockey sticks in a row is a big ask. Whereas copper, at least at the time last year, was relatively cheap when I made that call. So my view is, though, that to answer your question, is that the strength in the gold market has surprised me. I would have thought, like in late December, that some correction, a bit of a breather, would be normal and healthy at this point. That's probably still true. But, the world hasn't waited for us. Trump hasn't helped any, the whole reordering. And I don't want to get too much into the politics, but let's say, like, even if I believed in everything Trump was doing, even if I had a MAGA hat, right, I wouldn't want to be blind about the implications of huge changes. And, Trump's little disruption, that's not a little disruption. But, Scott Bessent, to be fair, he's been fairly blunt and I think straightforward in his answers on these questions. And the R word is out there, right? Recession. Just this morning, I saw the New York Times reporting that Trump's admitting that there might be a recession and saying it was worth it. I'm glad to see a little bit of, more forthrightness there. So don't take me wrong. I'm certainly not opposed to tax cuts or government efficiency, eliminating waste, fraud, and abuse. All that I really like. Deregulation, I think, is even more important. And digging deeper into the deep state, fixing the judges, getting judges that have some common sense or don't have some other, WEF type agenda or something in there. There's a lot of work to be done, and I'm all in favor of that. But it's a big deal. It's a big disruption. This is rocking the boat. I mean, just look at what's going on with Canada and Europe. And by the way, not to go on forever on this, but I think this is an investable point or an investable thesis here that changes the boat rocking that's happening now. That doesn't go away. Even if Trump goes away in 4 years, I don't think the Europeans decide, oh, well, that was just Trump. We can trust America the way we did before. I don't see that happen. They're going like, wow, these Americans, they elected Trump twice. Maybe it's better now, but we can't take the chance that there won't be another Trump or an even Trumpier Trump in the future, right? So I think the changes that we're seeing in the world now, they have investment consequences. The most obvious one is Europe's rearmament. I mean, wow, we are celebrating Germany rearming. What kind of world is that, right? But that's not going away. And that's, these are investable trends. So I think it pays. My goal isn't to be a cheerleader for one side or the other, or even for one metal or for the other.
While investors prize gold and silver as real money, their prices no longer move in perfect sync. Silver serves a dual role as a precious and industrial metal, with widespread applications in electronics, healthcare, water filtration, and window coatings. In contrast, gold has minimal industrial use, with nearly 90% of its annual production going into jewelry or investment bullion. As a result, silver prices are more sensitive to economic cycles than gold, making the gold-silver ratio highly volatile. With inflation fears rising again, what's your best hedge, gold, silver, or another asset? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.